Yes, sir.
Good morning, Mr. Rick Rule. Thank you very much for doing this. I really appreciate your time.
A pleasure to be on with you. Thank you for giving me the opportunity to talk to your audience.
You are very well spoken. Hopefully, you don't make this podcast look like a garage band. Have you always been that way?
I like to read, and the consequence of reading a lot is that your speaking improves, I think. I've also grown my various businesses as a consequence of being a competent public speaker. And so English is a language I'm fond of, and it's a school, pardon me, a tool that frankly has allowed me to lower my customer acquisition cost.
Nowadays, you're the CEO of Rural Investment Media, but in the past, you were the CEO of Sprott US Holdings and some other ventures. But how would you define yourself now?
I failed retirement completely, so I would describe myself as an investor, as a speculator, and as a person who helps younger teams build businesses in financial services and natural resources.
I thought for the purposes of today's conversation, we could structure it roughly on some of your early days in investing, some of your favorite investments, and some investment strategies and advice, if that works for you.
Broad topic. Pick away. If you're picking my brain, use a small fork.
So to go back to the beginning, where are you from originally and how did you get into resource investing?
I was born in San Jose, California, now known as downtown Silicon Valley. I joke that I wasn't smart enough to do technology, uh, so I did resources. I developed a fascination first for the out of doors, but then later for extractive industries. Um, I thought, among other things, that that would lead to a career where I spent more time outdoors, which will show you how stupid I was. Consequence of that decision is I've lived my life in an office for the last 50 years. I moved north. I emigrated to Canada to attend the University of British Columbia,
Mhm.
which at that time had, I think, the only degree program in natural resource finance. I found at the University of British Columbia that attending school was getting in the way of my education.
Mhm.
I came in the context of putting myself through school to become active as an owner in the hospitality business. And so I quit school. I wasn't going to the University of British Columbia for any particular noble purpose, but rather to get a piece of paper that would enable me to earn some money. And when I found myself earning substantially more money than tenured professors, I decided that it was time to leave. And I've been principally involved in natural resources and later conventional financial services businesses ever since.
How'd you get into investing? Did you always want to be an investor?
Yeah, I think so. There was a time when I was at UBC when I had a very, very, very convoluted set of goals. What I decided that I wanted to be was an international tax lawyer specializing in mining and oil and gas.
Mhm.
I had the very good fortune to meet a man in Vancouver named Warren Mitchell, who was a legendary tax lawyer. And I asked him for some career counseling, and he said, I would counsel you not to become a lawyer. I've watched you for a long time. You're a good businessman. You would probably be a good rainmaker. In other words, you would attract customers, but you'd be a lousy lawyer and you'd be miserable. He told me that my skills building businesses and the skills that I had developed as an investor would make me a very good investor. And he told me that the best investor in Western Canada was a man named Peter Cundall, and that unbeknownst to me, Peter Cundall liked me. And he suggested that I visit with Peter Cundall. I did out of politeness because I still wanted to be a lawyer.
Mhm.
And that meeting with Peter Cundall, he gave me a book called The Intelligent Investor by Ben Graham, which I decided to read out of politeness.
Mhm.
And it changed my life, changed my whole life. Peter became a very important mentor,
Mhm.
uh, taught me 75% of what I know about investing today, and just, opened a door to a career that's been financially and psychologically very rewarding.
So in your early 20s, you were thinking you could make a career out of investing full time?
Yep, I did. I also had the good fortune to meet through Peter Brown who was sort of the dean of the Vancouver Stock Exchange.
Mhm.
Very early on in my career, a wonderful man named Adolph Lundin.
Mhm.
The Lundin family, as I'm sure you know,
Mhm.
have become premier natural resource financiers. I had occasion to meet Adolph Lundin in either 1974 or 1975. I was either 21 or 22. I don't recall which. And I began to work with Adolph part time, which was an extraordinary good fortune.
Mhm.
The idea that you would meet one of the most successful people in terms of shaping your career that you would meet for your entire life when you were 21 or 22
Mhm.
uh, was very, very useful. I also had occasion to meet other very good mentors, Ned Goodman, Seymour Schulich. Uh, I went to University of British Columbia at the same time as Bob Dickinson of Hunter and Dickinson and Ross Beatty.
Mhm.
I was incredibly lucky. I also met very early in my career a legendary Canadian oil and gas and mining geologist named Hugh Mogensen,
Mhm.
who introduced me to a man in Calgary named Jerry Shaw, who was the best stockbroker I ever met in my life. He is the one that I patterned my own career in financial services after. Think of him as the mechanical pace dog at a dog racing track, chasing Jerry Shaw in my career, who I never caught. Uh, your older listeners will know that he unfortunately died of cancer before I could catch him. Was one of the best things that ever happened to me.
Actually, Will Undine, CEO of IPC, did this podcast about a year ago. So there's been a few uh, Lundins in the conversation. Did you realize Adolf was such a good entrepreneur when you met him originally?
No, but what I came to understand right away was that he was a truly driven human being.
Mhm.
He was also a truly nice human being. Those aren't always concurrent. He was very bright, extremely intense, extremely focused, extremely generous. And he was very, very, very willing to spend a lot of time with me. What he needed, because he was operating all over the world, was my energy. So we had a good trade. My legs for his brain. I got the better end of that deal.
And at one point, I read some point in the 70s/80s, you were working as a bouncer at a nightclub at one point to pay the bills. How did that end up coming about?
Uh, when I moved to Canada, uh, I didn't have any transferable skills, and I had to work my way through school. The only transferable skill I did have is that I was a big kid,
Mhm.
and I'd boxed from aged 8 to 18. And the fact that I had those skills, that size, and that remained sober when my opponents were invariably drunk, meant that I could do that. I had to work at night to go to school during the day. And in really short order, actually, through a series of mistakes, I progressed from bouncer to bar owner. So I was still a student when I came to own the establishment that I was working in. And that establishment at Hornby and Dunsmuir, downtown in Vancouver, became really the nexus, the after hours nexus for all of the characters involved in the Vancouver Stock Exchange, from Peter Brown, who was the dean of that exchange, all the way down to the sort of wily promoters. And I was able to learn natural resource finance much more thoroughly in the night, pouring whiskey, than I was during the day, studying studiously under professors that didn't make any money.
Mhm. And so you ended up with your first job circa 1974. Do you remember your first securities job?
My first securities job was sort of a freelance promoter for the McLeod family, uh, who are successful in the third generation today, for the Lundin family. It was fun. I was pretty good at meeting people uh, because they all came to my bar, and pretty good at distilling what were fairly complex topics into simple actionable ideas. And that I forget what year, but Canada passed the National Energy Policy, which was discriminatory legislation against foreign, particularly American investors.
Mhm.
And the consequence of that is that in 1977, I left Vancouver and went down to Denver and got in the oil and gas syndication business in the United States full time. My job was to go around the country and later around the world and translate oil and gas into English
Mhm.
so that generalist investors could invest in the oil and gas business.
When you read The Intelligent Investor, did that formulate your investing strategy kind of based on hard assets? How did you think about that?
Not based on hard assets, because the intelligent investor wasn't about hard assets. The intelligent investor was about putting the investment process in the context of human volition, the way that people think and act.
Mhm.
The most important chapters in the intelligent investor were, first of all, the Mr. Market section, which teaches you the value of contrarianism,
Mhm.
and the margin of safety part. Those really, really, really stuck with me. They stuck with me because I hadn't heard them before, but I had experienced them.
Mhm.
I actually started investing when I was 16. And the mistakes that were described in The Intelligent Investor were mistakes that I'd already made.
Mhm.
So that rang true with me. And the idea that I didn't need to make the mistakes that most people made was very important to me. And the margin of safety part is, I think, not unique to resources. I think the margin of safety applies to your own portfolio, and it applies to every single business. That was repeated years later by the famous junk bond guy, Michael Milken,
Mhm.
who said you can have a very leveraged balance sheet if you maintain liquidity for difficult times. He was really talking about the margin of safety. You can mitigate leverage if you're intelligent in your capital stack. The part of the intelligent investor that was important to extractive industries was Mr. Market.
Mhm.
The concept that you're in business every day, you're in public markets with a partner who's manic depressive. And one day, that partner wants to overpay you for the half of the business that you own. And on another day, in disgust, he wants to sell it to you for half what it's worth.
Mhm.
And your job is, in effect, to be the pawnbroker to this manic depressive partner. That translates to resources in a slogan that I've used for 50 years, which is in resources, you will either be a contrarian or you're going to be a victim. And so the dictums that were in The Intelligent Investor were dictums that served me well. When I found myself under the tutelage of Peter Cundall, one of the great value investors of all times,
Mhm.
I learned how to employ that. Uh, Peter Cundall knew a lot about a few things, one of which were redundant assets, hidden assets on the balance sheet that weren't necessarily germane to the income statement, but were worth more than they were valued at in the market.
Mhm.
He also understood the difference between peak and trough earnings, that a high PE company may be a high PE company and appear expensive because the product or service that they sell for is selling for an unrealistically low price. And if that price reverted to mean, that their earnings would explode. Conversely, a company with apparently low PEs may be at low PEs because they're at the top of the commodity pricing cycle. And the low PE can be the same trap, uh, conversely, uh, to the opportunity that you thought existed in the other case. And that served me very, very well. Peter Cundall introduced me to the work of Marty Whitman, who really pioneered value investing in capital intensive cyclical businesses.
Was the margin of safety and a contrarian approach the kind of antidote to the efficient markets theory? How did you come to terms with that concept of an efficient market throughout the years?
I think it's a silly concept. Um, I think if you're time sensitive, or pardon me, if you're time realistic, that markets aren't efficient. I think that money is made on the delta between what things sell for and what they're worth.
Hmm.
And so it's my belief. Oh, Buffett says, well, in the near term, markets are voting machines. They measure popularity. In the long term, markets are weighting machines.
Hmm.
And if you agree with the way people vote, maybe you believe in the voting machine. He never has. And the consequence of that is that his strategy has been to find good businesses that are, for whatever reason, mispriced in the market and buy lots of them.
Hmm.
Which has, not to say that I haven't made mistakes. I'm not as smart as he is. But it's a dictum that served me very well.
Speaking of making mistakes, somewhere along the way, I think it was circa 1980, you ended up making a mistake that you lost a good chunk of your money. What did you learn from that experience and how did it shape your investment philosophy?
Well, you're being very charitable. I didn't lose a good chunk. I lost 120%. I went from being a very wealthy young man, by the way, extremely hubris ridden.
Mhm.
I confused a bull market with brains, to being a young man with a negative net worth, but much less hubris ridden. I learned in 1982 just how smart I was, which is to say, not very. And while it was extremely painful, two good things came out of that. The first is that I didn't go bankrupt, that I organized my creditors, and I worked my way through it. And the consequence of that is that four of those six creditors became important customers of mine for the rest of my life. And importantly, I maintained my own sense of self-worth, my own sense of pride. The second thing that happened is I learned I learned to be a contrarian. I learned that the cure for high prices was high prices. In the decade of the 70s, I forgot the margin of safety.
Mhm.
In the decade of the 70s, the gold price ran from $35 to $850. The oil price went from 2.5 US dollars to 30. Natural gas price in the US, uncontrolled natural gas went from 30 cents to $15. And somehow, through all that, I thought I was smart. When the commodity boom busted in 1981,
Mhm.
I had a fairly leveraged balance sheet. And I learned just exactly how smart I was, which is to say, not very. But it was the last time I made that mistake.
Mhm.
It taught me cyclicality in resources. It taught me that when resources are overbought, when operating margins in extractive activities across the board are 50% or better, you got to start being a seller.
Mhm.
And the other side of that is that when commodities that are necessary to the material well-being of humankind are priced at a level where the industry selling price is below the industry average cost of production, when the industries are in liquidation, you got to be a buyer. And I always get them wrong, both. I always buy a little early
Mhm.
and I always sell too early. But I've done pretty well, Trevor, for the last 50 years, taking a nice fat slug out of the middle.
Mhm.
Bernard Baruch once said the only guy who absolutely bought at the bottom and sold at the top was a liar. It didn't happen.
Mhm.
And I'm certainly living proof of that.
And so through the years, like you mentioned, you've met some great natural resource entrepreneurs, including the Lundins, Seymour Schulich, Eric Sprott. What traits did all those characters share that you've noticed that has helped you?
A few things set them apart from other people. The people who I watched become billionaires were insatiably curious about everything.
Mhm.
I mean, Robert Friedland, he's a polymath. He can talk to you about 20 things
Mhm.
and not just talk, he can listen. He asks really deep, really probing, really penetrating questions. The same bright eyes that Adolf Lundin had, you know?
Mhm.
The second thing is they work really hard. Robert Friedland, I don't know what he's worth, but I know he's in his late 70s. He's older than me. And he's working 14, 15-hour days, except it's not work.
Mhm.
He loves it.
Mhm.
And all of those guys have been the same. The third is that they all understand that their time preference doesn't matter. Well, most people want to live rich. Those guys wanted to be rich. And they understood that the secret to financial success was compounding. Compounding takes 5 years or 6 years or 7 years. Many investors, many traders have the right strategy, which is a 5 or 6 year strategy, but they have 3 month tactics.
Hmm.
And the intersection between a 5 year strategy and a 3 month uh, tactic is usually poverty.
Hmm.
They were also extremely tenacious. I learned back testing in my own portfolio that the majority of my very big wins, 10 baggers, 20 baggers, 30 baggers, involved holding the stocks for 5 or 6 or 7 years,
Hmm.
and also involved a 50% share price decline once or twice during the period of time that I owned them. Most speculators that I know don't have the intestinal fortitude or the confidence in their stock selection to withstand a 20% decline. One of my great successes, well, I'll tell you two stories. Paladin, which was my greatest single success, I bought at a dime, and 6.5 years later, it was selling for $10 bid. But before it did that, it fell from a dime to a penny.
Hmm.
I was down 90%. Now, if you're down 90%, you don't have a hold, you have a buy or a sell.
Hmm.
And mercifully, I had the discipline to revisit my premise, decide that I was right, the market was wrong. And while I missed the penny trade, I didn't miss the penny and a half trade.
Hmm.
A second story, which will be of more use, I think, to Western Canadians, was my friend Ross Beatty called me up and told me that he was going to buy out of favor copper assets. Arithmetically, one of the worst deals I ever did. I put up the money. He got 60% of the stock. I got 40. But financially, one of the best deals I ever did. And uh, three different times during the period when I held my Lumina copper stock, the share price declined by 50% or more.
Hmm.
But over the 6 or 7 years that I was involved in Lumina, the stock went from 50 cents to the total liquidation of $162.
Wow.
Now, I'm not suggesting to you, by the way, that I kept all the stock the whole time. That did not happen. I scaled out along the way. But it proves that tenacity and study are really requirements to make good money in investing.
Another great investment you had was circa 1985 with Franco-Nevada in Northwest Nevada, where you participated in the early Franco-Nevada shares and they came across the Screamer well, which ended up with approximately 1,000 feet of gold. How did that come to be, and when did you make that investment?
One of the great geologists in Canadian history, and by the way, one of the nicest men that ever lived, rest in peace, is Hugh Mogensen, a spectacular geologist. And he was, I think, the lead technical guy for Seymour Schulich and Ned Goodman at Butel Goodman.
Mhm.
And he became a very good friend of mine. And in 1982, he called me up and said, Seymour and a really smart young guy named Pierre Lassonde are starting this company, and everybody gets into the same price.
Mhm.
There's no escrow stock, there's no penny stock. It's being done at 35 cents. And I got you a $10,000 allocation, and you're out of your mind if you don't take it. This is going to work.
Mhm.
So I took it. And to begin with, they were sort of the typical Nevada exploration story, good geologist. The idea being that they would attract European capital to conventional exploration in Nevada behind a very, very, very good team. They saw an ad in the Reno paper, an ad offering up, I think it was a 5% NSR on a small producing gold mine, but a large land spread
Mhm.
in the Carlin Trend for $2 million. Seymour had a lot of experience in oil and gas royalties in Western Canada and had done well in the royalty business. And so they bought it. And that royalty, when another small Canadian company took over the operator had been Lacana, I think,
Mhm.
a little company called Barrick,
Mhm.
postulated that surface oxide expression had a deeper sulfide root, that the fluid flows that did the carbonate replacement up in the sedimentary horizons came from somewhere. And they decided to find out where.
Mhm.
And at no cost to Franco-Nevada, they drilled a couple of holes, saw some alteration, and then they drilled the hole that you referred to correctly as the Screamer. 300 meters of 32-gram gold. I
Wow.
remember seeing that press release. This is back in the days, by the way, of wires
Mhm.
before the internet. And I remember looking at the wire, and I remember thinking that it was a typo.
Yeah.
And I called Franco and said, "Is this true?" And they said, "Yep." And I remember calling our trading desk. In those days, we traded through Dundee in Toronto. And I said, "Franco and Barrick, buy." And they said, "How much?" I said, "Call me later on that. Just buy. Price limit? None right now." I mean, I've never done that in my life. The market was about 45 minutes late in responding to that news.
Wow.
And never in my life, before or since, was I able to say to a desk, "Just buy. I'll figure out how much spare cash we have and get back to you. But for right now,
Mhm.
I want you to take out the ask, and then I want you to take out the next ask, and I want you to take out the subsequent ask. Do we understand each other?" It was one of the finer days of my life.
Franco-Nevada went from about $250 market cap to 10 billion over the next decade as a result of that.
I don't know. I mean, here's what I do know. They paid $2 million for the royalty, and they've taken in excess of $2 billion out of the royalty. The Franco-Nevada spun off, well, they started a second company called Euro-Nevada.
Mhm.
Those two companies merged, and then they merged into Newmont and BRG Normandy
Mhm.
to form the largest gold mining company in the world. At some point in time, uh, Newmont spun off Franco-Nevada again. They sold it to the market for $1 billion, which they needed, and I got involved again.
Hmm. And was it literally 1,000 feet roughly of gold straight down? Is that how that
I don't
worked?
know what 300. I don't know what 300 meters is in footage terms, but it's a lot.
Wow.
And as I recall, it was 31 or 32 grams, which is pretty close on an ounce. And as I say, when I read the tape, I actually thought it was a typo.
Mhm.
And then I thought, maybe they drilled like right straight down the structure. Maybe they gutted it, but I don't have time to find out. I got to go. And it turns out they didn't gut it.
There's sometimes can be, I guess, fraudulent activities in that,
Sure.
looking for gold and it's not always what it seems. Is that ever, not with this case, with a good operator, but how did you think about that? How did you make sure you weren't chasing the wrong information?
I got victimized a couple times by people drilling down structure, not reporting true widths. I got victimized other times by outright fraud.
Yeah.
The truth is, if you operate on the ragged edge of speculation, which I have for 50 years, you come to tolerate making mistakes.
Mhm.
Making mistakes are the price that you pay for being able to participate in successes.
Hmm.
I've really, since probably I was 35, uh, I have a no jerks policy,
Mhm.
which is to say, if there's bad people involved, people that I know to be bad people, I just don't do the deal, no matter how attractive it is.
Mhm.
Uh, Good guys can make bad rocks work over time, and bad guys can wreck good rocks. And so, besides which, I don't want the brain strain, of that. I like to take big positions, and I like to take big positions with people that if I have a dispute, we can work the dispute out over dinner as opposed to going to court.
Mhm. Fair enough. And on the flip side to your best sort of investments, were there any that kind of got away from you that maybe you wish you would have invested in, or maybe
Oh, sure,
didn't work out
lots,
at all?
lots, but I never worry about those much. Um, I'm not a guy. I'm not an envious guy, and I'm not a guy that's given to fear of missing out. I was introduced by a good friend of mine, a very good friend who I know and love and trust to this day. I was introduced to the concept of Bitcoin at about $10.
Hmm.
And he said, given your political beliefs, Rick, you have to own this. this is a medium of exchange that benefits from the network effect, benefits from very low transaction costs, and is completely anonymous.
Mhm.
This gives people the ability around the world to divorce themselves from the tyranny of the state.
Mhm.
And I didn't do it because I didn't understand it.
Mhm.
Um, do I regret that? No, not a bit.
Yeah.
This guy, by the way, hit a truly long ball home run. I won't name him because he would prefer not to be known. And he would prefer, if he were known, that people didn't know how much money he made.
Mhm.
But the idea that a guy put half his net worth, and it wasn't a great net worth at that point in time, into Bitcoin between $10 and $20, it was the greatest hit that I ever witnessed.
Another successful entrepreneur and investor you worked with was Eric Sprott, which I think ended up being your business partner at Sprott Global Resource Investment and Sprott US Holdings. How did you guys meet and how did that come to?
Well, partners in the sense that he had 26% and I had 10%. It was not an equal partnership. I'd known Eric for a very long time. I was introduced to Eric by Murray Sinclair Sr., one of the most colorful Canadian speculators that ever lived, and a dear, dear, dear friend of mine. Again, rest in peace.
Mhm.
And I immediately like Eric. Eric was a competitor of mine. He was a customer of mine. I was a customer of his. He's just a superb guy.
Mhm.
Uh, in about 2010, my business had become so large that I was spending half my time running my business, and I was spending only the other half trying to make money for my customers. And I thought that that was a dishonest relationship. And so I started looking around for somebody to run my business, which I didn't do so well, so that I could go back to making money, which I did do well.
Mhm.
And among the young entrepreneurs that I thought would do well running my business was a young Canadian investment banker named Peter Grosskopf. He had built up what became TD Securities, Newcrest, and sold it to them.
Mhm.
And when they 5 years later took the golden handcuffs off, he was out there. And so I said, I began to enter into discussions with Peter saying, would you be interested in running my business? And at one point in time, he called me and said, I've decided that I'm going to go be the CEO of Sprott. I'm going to run Eric's business.
Mhm.
Being a good investment banker, he said, now we could continue our discussions about my running your business, but the ownership would have to change. And I thought about that, and I thought, utilizing Eric's brand name in the US, having access to Eric's intellect,
Mhm.
having Peter run my business, and being free to going back to designing investment products and doing transactions that improved my customers' well-being is not a bad trade.
Mhm.
And so we did that. I have a wonderful, wonderful memory. Well, two memories that come from that in terms of interaction with Eric. One was in discussing our investment thesis. Given my background in credit, I told Eric that in a business as volatile as resources, where the rewards take care of itself, that I tended to manage risk,
Mhm.
figuring if I looked after my downside, the upside would take care of itself. And he started laughing, and he says, "I'm exactly the opposite. I chase rewards. If I get a 20 bagger or a 30 bagger, that amortizes a whole bunch of mistakes."
Mhm.
And I think each of us maybe made the other a little bit better as investors. Clearly, the outcome is he's a better investor than I. Um, but it was a very useful time. The other story, if I may, that's a wonderful Eric Sprott story.
Mhm.
After they bought my business, all the directors and their wives and stuff came down to California to look over the business, and we had them over to our house for dinner, just casually, so we get to know each other barefoot, you know.
Mhm.
And at one point in time, Eric's not there, so I figure he and my wife probably snuck off to have a smoke somewhere where nobody could bug them.
Mhm.
Both were fond of that, to the disgust of their respective spouses.
Mhm.
But that's not what happened. Eric decided that my wife Bonnie shouldn't have to do all the dishes, and he was in the kitchen doing the dishes. Uh, you know, in the house of the person he just bought. Uh, a very nice thing and tactically superb
Yeah.
because he owned my wife's affection as a consequence of that for the entire period of time that we did business together.
Probably not in a stage of his life where he had to do dishes anymore either.
He didn't at that time have to do dishes. He just he was that kind of guy.
Yeah. Well, maybe some current events, if that's okay with you.
Sure.
Oil, peak oil. You mentioned in the past that investors should be more aware of peak cheap oil and how that may be more relevant than peak oil. What did you mean by that, and how is it applied to the markets today?
The market today prices oil as though Greta Thunberg and Justin Trudeau were right. Their supposition is that peak oil demand occurs in 2030 or 2032. To be eclipsed by what? I don't know. What that means is that when somebody does a net present value on Exxon or Canadian Natural, they leave off the tail, the net present value tail.
Mhm.
I believe peak oil demand occurs in 2065 or 2070,
Mhm.
depending on price. When you do a net present value calculation on a good oil company, what happens is that cash flow that occurs after year 8 or 9 doesn't count on the net present value. But you restart the net present value calculation at 100 at the end of that period.
Yeah.
What that means is that I think that the oil complex is underpriced by half,
Mhm.
which is pretty attractive. I've watched this occur now for 50 years of my life. I've learned a couple of other things too. I've learned that people miscalculate the cost in the oil and gas business. They look at lifting cost. They don't include social rent and
Mhm.
they don't include cost of capital.
Mhm.
When you add the entire cost stack across the entire industry, including the parastatals, the PMEXs, and the PDVSAs in the world,
Mhm.
and this is confirmed by the International Energy Agency, the total cost of producing a barrel of oil, including G&A, social rent, cost of capital, is closer to $60 a barrel than it
Mhm.
is to 50. We talked earlier in this interview about the fact that when you see a commodity that's necessary for the material well-being of humankind selling at a discount to the cost to produce it, you have to buy.
Mhm.
I take myself back to the beginning of this decade, the COVID area, where the West Texas Intermediate price went to zero at one point in time,
Mhm.
but hovered around $20 a barrel. The total cost to produce a barrel of oil at that point in time was about $50, and the industry was selling it for 20.
Mhm.
So you make the stuff for 50, you sell it for 20, you lose $30 a barrel, and because you're dumb oil men, you try and make it up on volume. It was very clear to me that the price of oil had to crest through $50, or my car wasn't going to start.
Mhm.
Those were the two options.
Yeah.
That's the clearest buy signal in the world.
Yeah.
And most of the big thinkers ignored it. Most of the big thinkers were around the COVID narrative. The other thing that was incredible, and I got this one wrong, by the way, Exxon, finest allocator in the energy business by a country mile. Great upstream, great downstream, made their sustaining capital investments, made new project investments, and distributed cash to shareholders. Got kicked out of the Dow Jones Industrial Average.
Mhm.
So all the index funds had to sell it. Now, this is by its definition a non-recurring event. You can't get kicked out of the Dow 30 twice.
Mhm.
So we have a circumstance where the oil price is unsustainably low and Exxon gets kicked out of the Dow 30 and it sells off like a boulder off a bridge.
Mhm.
And I was so stupid that I was trying to figure out how low it could go.
Mhm.
Sometimes stuff is cheap enough. In fairness, I did come to my senses. But by the time I came to my senses, it was already 15% of its bottom, which is incalculable stupidity for somebody like me who has trained for that moment his entire adult life.
Mhm. Yeah. During the pandemic, I think there was a bunch of oil names you could have bought for generational lows, but
Mercifully, I did. Mercifully, I did.
have you found it to be better to pursue those kind of event-driven strategies in commodity businesses, or do you look for the new finds? Have you found it too good to just be buying top producers through the years? What's been the best way to go about that?
For my own money, I'm willing to be very speculative. I work very hard. And if you're working in the sub billion or especially the sub 100 million market cap space, you have to work extremely hard.
Mhm.
Information is inefficiently distributed. Liars are everywhere. You have to work very, very, very hard. When I'm investing for other people, what I've learned is that capturing the beta as a contrarian
Mhm.
is very rewarding. If you look at the gold market or the oil market, beta, which I would describe as the outperformance of that sector relative to broad equity markets,
Mhm.
could be 300, 400, 500%. That's probably enough. If you can capture for most people the beta by causing them to buy when they don't want to, but they should,
Mhm.
and then causing them to sell when the narrative has been valuated, but the industry is overpriced,
Mhm.
is a good thing. So, were I constructing a gold portfolio today, as an example, for a new investor, I would buy that investor Franco-Nevada, Wheaton Precious, and Agnico Eagle. Stop.
Mhm.
I'd buy them the best of the best. Ironically, through the course of a gold bull market, that portfolio would underperform risky, more marginal names.
Yeah, exactly.
But the idea that I would capture 85% of the beta
Mhm.
while eliminating 100% of the operational risk
Right.
is a really good trade for me.
Yep.
A really, really, really good trade. So, really, it depends on whose money I'm investing.
Mhm.
I have a very deep contacts list of absolutely superb earth scientists, geophysicists, geologists, stuff like that.
Mhm.
I have an ability that most people don't have to check the veracity of an exploration story with people who know.
Mhm.
I'm not talking about sell side analysts, and I'm not talking about paid consultants. I'm talking about people who invest their own money and have the ability to be at least as impartial as you can be. And the fact that I have that network gives me the ability in exploration stories, speculative stories, to outcompete most others.
Mhm.
My other advantage, I guess I have two advantages. One, I have a reputational advantage. So I often get invited into circumstances that the rest of the world doesn't often see. And I become extremely patient.
Mhm.
I compete with a lot of guys who have all the advantages I have, but they're impatient.
Mhm.
They clip something for a 40 or 50% gain when 1,000% is on offer.
Mhm.
And I'm good enough at arithmetic that I prefer 1,000 to 30 or 40.
Yep. And so through the years, although there are inefficiencies in the resource sectors and energy markets, they're largely efficient markets a lot of the time with a lot of eyes on the market. Have you found that good geology and source rock can be your informational advantage?
Absolutely. I mean, the efficient market theory probably works better in the energy space because it's a bigger business
Hmm.
and it's a better business.
Hmm.
Um, there, it pays you more to be a contrarian, but in the mineral exploration business, it's mostly about science.
Hmm.
Um, what's happened in the energy business is that the convergence of technologies, three-dimensional seismic, horizontal drilling, measurement well drilling, pressure stimulation, has turned what was primarily an exploration-driven business into a production efficiency business.
Hmm.
And the exploration part of the business, I think, is postulating fracture fairways or new shale sequences or basin-wide discoveries. It isn't so much what it was in the Lundin time of taking of undrilled frontier basin, running some seismic, taking a pole, taking a punt, drilling a deep hole, and discovering a billion barrels or more frequently a dry hole.
Mhm.
The business has changed a lot. Uh, I myself am going back into frontier exploration speculation because all of the smart money that used to beat me at that has all migrated to the current reality in oil and gas. And I'm trying to see if I can't participate in another offshore Namibia or another offshore Guyana. We'll tell. Well, time will tell if I'm right. It's just that that space is very, very uncrowded.
Yeah.
And there are some very smart young people operating it. And the conjunction of technologies that's occurring there around seismic and seismic processing, I think, I think,
Yep.
maybe don't quote me on this, I hope will begin to yield the same statistical improvement in exploration that we've enjoyed as a consequence of the earlier technologies in development drilling.
Did you take a portfolio approach to your investments? Did you rely on the outliers? How did you think about that? Did you concentrate?
My preference is to concentrate, but given that 30 or 40% of my portfolio is highly speculative,
Yeah.
there's only so much concentration that you can afford.
Hmm.
As a speculator, if you're honest with yourself, you come to understand that most of your decisions are mistakes. And you need to limit the exposure that you have to a mistake to an amount which is affordable.
Hmm.
On the investment side, I have sometimes been extremely focused. If you were to take me back in the gold space as an example, there was a while where probably 90% of my portfolio was Franco, Wheaton, and Agnico because they were so cheap statistically that it didn't pay me to take the risk.
Mhm.
I mean, I could see that the riskier stuff was even cheaper, but it didn't matter to me. It seemed to me that the probability of superior returns on capital employed in Franco-Nevada
Mhm.
was 100%. And 100% is a very good number.
Yeah.
You know, if I thought that there was a 100% probability that I was going to pull off a triple, as opposed to a 10% probability that I was going to pull off a 10 bagger, arithmetically, that's a pretty simple calculation.
Yeah. When you're looking at investments, was return on capital and maybe per share production and cash flow growth a few of the metrics you paid attention to? What did you think about when assessing resource businesses?
It depends on what I was looking at and what point in time. I've been interested as a long-time investor in recycle ratio. I've been extremely interested in efficiency, and I've been extremely interested in specialized knowledge.
Hmm.
I've been interested in backing management teams that had been successful in the activity that they were involved in at that point in time. One of my great early successes in investing was Freeport McMoran Oil and Gas in the Gulf of Mexico. A colleague of mine, Jeff Howard, pioneered the measurement of efficiency in various criterion. And he had, if I remember correctly, 14 efficiency gauges. Um, you know, exploration cost, lifting cost, blah, 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 blah.
Mhm.
And he rated probably 40 companies in the Gulf. And in every measure of efficiency, Freeport was one, two, or three.
Hmm.
And if you combined them all, they were so far ahead of anybody else that there wasn't a race. And understanding that was very useful to me.
Mhm.
It was very useful to me. It was useful enough that I got to know Jim Bob Moffett, the CEO, and I asked him a very flattering question: "How come you guys are so good?"
Yeah.
You know, and he liked being flattered, by the way. Again, rest in peace. And he said, Rick, I think what we do differently is if we're competing with Shell for a good young geo, we do two things. If he works at Shell and he makes a couple of good discoveries, they give him a pay raise from 81,310 to 86,429. And if he brown noses the boss, he gets a credenza, you know?
Mhm.
And we give him a profit participation that vests over his time at Freeport. So if he's working for them, he makes 85, and if he's working for us, he makes 200.
Mhm.
The second thing we do is if this person's being too conservative, I go up and I sit down and I look him in the eye and I say, son, you're better than you're letting yourself be. We didn't build Freeport by drilling 2 BCF corner shots. We built Freeport by making 250 million barrel discoveries. And you got one of those in you.
Mhm.
You're just afraid to go for it. Don't be afraid to drill me a couple good dry holes if they were good ideas. Don't make a career of it. But you're better than drilling 2 BCF corner shots. I believe in you more than you believe in you. And you got to take a look in the mirror and discover that Jim Bob is right and you're wrong. And you got to reach. Now, the empowerment that this gives an earth scientist,
Mhm.
where the boss comes over, puts his arm around him and says, get it on, boy. And I had the same discussion with a couple of really good geologists who work for Robert Friedland.
Mhm.
And they said, as difficult as this guy is to work for, the shouting, the screaming, all this kind of stuff, the fact that he believes in you, the fact that if you have a good exploration concept that fails, he says, look, take the weekend off, grieve, then get up, dust yourself off, and go make me that money back.
Mhm.
I believe in you. That's important.
Well, I know we only have an hour today, so maybe as we get towards the end, depending on your time, maybe some questions on advice to young investors, if that's okay.
Invest in yourself. I mean, I got that one right. Before I started investing, I read a couple of books and I found a great mentor. So before you waste your money, uh, invest in yourself. Knowledge is an asset that can't be stolen. In my case, some of it was wasted, but that's different. That's your fault. So invest in yourself, learn your craft. You get ahead by out competing other folks. That's how you do it. You make money by generating more utility for other people than you consume yourself.
Mhm.
You do that, I think, by specializing in something you love, which I've been able to do. But the most important thing is invest in yourself. The second most important thing is the most important asset you have, other than your knowledge, is your brand. So be a good person and come to be known to be a good person. Uh, the long road is the shortcut, as strange as it might seem.
Mhm.
And the third thing I think is to be patient and tenacious. Making money involves compounding, and compounding takes time. And you can't allow yourself the time if you haven't built up the knowledge, and you can't afford the time if you're not tenacious. I know that sounds like worldly advice, and
Yeah.
probably too nebulous to matter, but it sure has worked for me.
And in the world of tech and high margin businesses like that, do you think there's still opportunity in resource investing to make a fortune like some of
Well,
like you
first
have
of all,
others?
resources is a technology-based business. If you can't keep up with the technology, you should go deliver the mail or something like that. Uh, but yeah, there's a huge skills gap. People haven't been attracted to the resource business for 4 decades. The guys that are carrying the water are my age.
Mhm.
We're in our 70s. We're going to die. I don't mean figuratively. Uh, the opportunity in the resource business is as great as the opportunity was in the early 70s when I went in. We hadn't attracted new talent then since the end of World War II.
Mhm.
Uh, the talent that was on top of us died, literally, and we came in. We're dying, literally, and it's there for your generation. I mean, it's wide open.
Mhm.
There's, people in Canada talking about the fact that they can't make a living changing tires or whatever they're doing.
Mhm.
If they learn a skill and go underground, they're making 150 or $160,000 a year.
Yeah.
18-year-old boys that can weld, that are willing to work in northern Alberta and live in a camp. 18-year-old boys making $120,000 a year.
Yeah.
Uh, if they accidentally drive to the wrong camp, they get a pay raise.
Yeah.
Um, Sounds like opportunity to me.
Like you mentioned, after you've had a few decades in the business, but and you haven't had to work for a while, but you still do. What motivates you and excites you about investing now?
My wife will tell you that my brain needs to be stimulated or sedated, and working is healthier for me than drinking. I just like it. It's like a three-dimensional game of backgammon. Here I am, thinking about retirement and I start a bank.
Mhm.
How stupid is that? But I'm having so much fun. I have a lot of friends in the business. I don't, I don't talk about hockey or baseball. I talk a little bit about politics if I want to get angry.
Mhm.
I don't have a TV, so I'm not involved in popular culture. But I like hanging out with people in my business and making money for them and making money with them, helping them build businesses. I just enjoy it.
And wisdom accumulates. What's one area of your life that you found that you've noticed getting better through the years?
Oh, most of life is getting better. Actually, um, the internet is an example. It used to be that your news sources in Canada were what? CBC and Torstar, and now there's 10,000 points of light like you. They aren't all muzzle flashes. The distribution of access to information and paradigm is much better, much, much, much better. Just as an example, the distribution of education around the world, partially through the internet, means that the group of young people who invented technology like Google or Apple don't have to be in Sunnyvale, California.
Mhm.
They can be in Lagos or Jakarta or Odessa. This is fantastic. I mean, if you look at technology, it all came out of my hometown. It all came out of Silicon Valley. It all came out of folks that look like me. Now, old, fat, bald, white, rich guys. It doesn't have to be like that in the future. It can be brown, it can be black, it can be female, it can be in emerging markets. This is unbelievable. We get to access the intellect of 8.2 billion people on Earth,
Mhm.
as opposed to 500,000 people in Silicon Valley. What could be better than that?
For sure.
Now, there's downsides. Those 8.2 billion people believe in politics. So we have the harness of the fact that our collective stupidity is beginning to override our individual initiative and tenacity. And we got to get past that. But I think we will.
Well, if we were to maybe leave the listener with a message, today is July 3rd, 2025, without getting too, I guess, short-termism, what would you leave a natural resource investor with today?
You're in the early stages of a precious metals bull market. That will be one for the record. Hang on. You're early in a resources bull market. I think we have a little bit of economic weakness to go through, but early is better than late. Pay attention to fundamentals. Don't chase fads. Buy stuff that's out of favor rather than in favor. Learn to love hate. Make time your friend.